So remember, starting off with the income statement first, revenues and expenses. Take all your revenues that you have and all the expenses that you have. So this is my revenues and expenses, all the expenses there. Remember total expenses. And remember supplies expenses only go to supplies when we actually use them. When we purchase supplies, that's an asset until we actually use it, because we can take it back if we need to. All right, then we kick that into our retained earnings. We do our net income minus our dividends. That gives us our increase or decrease, and that gives us our total retained earnings that we have, which feeds us into then the balance sheet. That's all the numbers there. And we'll touch on the closing entries just to give you guys an idea what that looks like here. But this is not going to be probably required for the exam, but I'm just going to close up and do it anyways, so you understand what the closing entries are. So the important things to remember the closing entries are this. All income statement stuff needs to be, we need to get rid of it and take it back to zero. That's what we're going to do. So we take all of those back to zero. And then in the, then we take care of the dividends and our retained earnings as a part of that. So let's take a look at that. And the retained earnings, I mean, is the net income. So everything in there needs to be removed. So first things first, I need a debit. First one was fees earned, right? Is it fees earned? Fees earned. I guess we're going with fees earned. This should be the same account, but there's some reason it's different here. Revenue. And then we're going to close that out to income summary. Income summary is a holding place for it. So remember that, it's a holding. And by the time we're done, we basically get rid of that holding account at the end of it. We're just moving everything into our retained earnings. And that's what basically the closing does for you. So part of that. So in rent, fees earned, I'm going to go through all the expenses here. Remember where to find that. That starts on 25, 125 there. Oops. Should have come someplace first. Sorry. Taking all the expenses in here, we're going to remove all those out of there. So we basically start off at zero next month.
Is this something you do every month, or I thought this was at the year end?
They'll do it in probably a lot of companies will.
Really?
Yeah, they'll do this. Basically, this is all done in the background.
Right, okay.
The computers do all this for you.
Right.
So, but to have the knowledge if there's a mistake, figure out how to get there and how things are happening, what's
Right.
going on. It's kind of foundation of kind of understanding all of that there. So my income summary, let me just put the numbers in here real fast. Actually, I might just copy them up here. Save some time. So just save numbers. That's my estimate. All right, so if you take the difference between these two here, that's my net income, right? So that's what we're going to get rid of here. So that's my net income. So I've got it written in the whole income statement. Ready for all we go there? So there's 4 steps to that: revenues, expenses, net income, net loss. And now we're going to do dividends here. So the dividends we take away from the, we're going to get rid of our dividends. I'm gonna take my retained earnings. Then I have my dividends on the table. Remember, our dividends is typically a debit balance, that's why we're crediting it, taking that back to zero. So that we can figure out what we're giving on dividends. How much we, it's 10,000. All right, questions on that? I'm not gonna do the post-closing trial balance, double check everything for this. Good right there, around this, at that point.
But this
Questions on-
this possibly won't be on the exam, or this won't be? Okay.
Yeah, you'll have, and in fact, this shouldn't be on there either, when I looked at it there. So when I'm going over our problems that you, pretty similar to what you may see.
Okay.
So all those problems we've gone over, and it's tape two, so you guys have missed that. They're all, so
Right.
you have a good idea of the problems. There are 15 multiple choice problems in there. You guys will get welcome to use your book. You can Google it. I don't care. It's 2 hours. You can do it. Just don't talk to each other. That's, you can find whatever resources that you can. All right. Any questions on the first these three we just did here? I'm gonna jump into 518 here. Index 518. That is on page 253.
So this exam we're taking is on the same page exam?
Yeah, we have a Cengage. It's out there already. Make sure you guys go through Canvas to get to it. You'll see it there. So go through Canvas to get through it. So when you go to Canvas, just click on module 1. You can just go chapter 1. It'll take you right to all that stuff. If you haven't been going that way, you're going directly to Cengage, go through that way. I will move all your stuff over for all your grading for all that stuff that was in the other one. Because there's 2 actual.
I know, I've been like,
Yeah, it's driving me crazy. Okay, so I saw that, I realized that last week, so I'm trying to figure out how to, so basically I'm stopping the other one, you guys move into that one, I'll send another email over mine, I'll send you that way. So just make sure you go, because I know I've had a few people reach out to me and ask that question about that, because it's crazy. So, and then your grades should automatically populate into Canvas, when you're on that system, but the other system you can't. Yeah, there's a lot of problems with the other side anyways, so that's fine.
I emailed Centage.
Cengage?
Yes, Engage, and they said it was something you would have to do to combine them.
Yeah, so I will combine those. I will just basically go through and move your grades over there.
Okay.
That's what I'll just do. And then I'll move forward with it in there. And then I will move the other one. So, but if you have an issue, please email me or you come in, I can walk you through even that tonight if you're not struggling getting in. I will make sure you get you.
okay, so the midterm is on, because I didn't see it listed under the modules in my.
It should be, you know, I may not have moved it up there, but if you just click on chapter 1, it will take you right to Cengage and you'll see it in that.
Okay.
So you don't have to have it directly to that, as long as you can get into that Cengage.
I
it's
just
there.
looked mine and it's finally there,
Is that there?
It's
Okay.
there.
Okay,
so.
okay. So yeah, it should be available to you. You have till Sunday. Just block off a couple hours, then you'll be able to take the exams. So what I recommended when I was talking earlier is to make sure that you do the, take a look at the problems. The problems will take a lot longer than the multiple choice questions. So, and then you usually wait a little higher, it's a part of that too, so. just be
Okay,
aware
so
of
it's
that.
not unlimited, it's 2 hours.
It's 2 hours, yeah.
Okay, the one I saw was, that it said unlimited.
Did I leave it unlimited? If I did, then that's where it's gonna be. So if it is, it says unlimited,
Okay.
then it's gonna be unlimited. Usually I block it off 2 hours, but
Yeah.
I messed up, and hey, there you go.
Okay.
Yeah, usually I have that changed on that, but maybe I didn't change that in there, settings, so I did. Somebody's already taken it, so I can't, I'm gonna somebody else, so.
Oh.
All right, so let's do this problem here. This is on sales tax, so I'm on page 253. So 253 there, it says, journalize the entries to record the following selected transactions. So take a look at these here. So we have sold 62,800 on merchandise on account. So remember when you see on account, it means accounts payable, accounts receivable. So as we sold it, we're going to be receiving money from people, so that's accounts receivable. And then we have sales tax, because we always love sales tax. We have that on there. The cost of goods sold is 37,500. All right. so we can do some math real quick. I'll pull up my calculator. Phone. All right. So accounts receivable. Now, accounts receivable that we have, I'm going to show this here. Move the camera over real quick. It's a head on that.
You're good.
So we're logged into the Wi-Fi here, this is my
Is
first
that-
time on campus. Is there?
You just go to any new wireless and use your same username and password that you have for campus.
Okay.
So you're not in the visitor one, are you? Okay. It should be that. It should be that. So we have accounts receivable, sales, and then sales tax payable. Let me know if you have any questions on anything there.
Well, thank you very much.
Sure, no problem.
Appreciate it.
All right, so that's what we're gonna have here. What's our sales? It was 62,000.
62.8.
628, okay. Then I need to take 5% of that, which is 30,140. I'm guessing.
3140.
Yeah, that's all right. Okay. So 65,940 is my accounts receivable there. All right. So that means we have a commitment to pay the sales tax. We collected it for the government. We'll pay this. We have to take that in as a part of that. That is our sale. Then we're gonna do our cost of merchandise sold, and we have our inventory that we'll be pulling out of there too. So let's do that. So cost of merchandise sold. I'm gonna show up this. And then merch inventory. It was 37,500?
Yeah, 37.5.
Okay. All right, so that is a recorded transaction that will happen. Because remember what happens in the chapter 5 here is we added on merchandise. So it cost us something as a part of that when we didn't do that in the first 4 chapters. So now we sold something as a part of that, so we take it out of our merchandise inventory. That reduces my assets, and then I put this in here as cost of that merchandise. So our actual gross profit on that is the difference between these two. This is our money. It's someone else's. Questions? All right. So that's A. B says paid $39,650 to the state tax for the taxes collected. So we collected this taxes here. It doesn't have to do anything with the amounts of this tax here. It's just the total amount that we had. All right. So we have sales tax payable. This is A. These down here. So sales tax payable. And then we have cash. What was that? Just 39 something?
39,650.
250, okay, thank you. All right, so that's our transaction there. Questions? Remember, yes, we have that cash in there, and we've been collecting it from other people for that. And make sure you guys can pay that, because that's the easiest way to get shit done. Government wants their money. All right. Questions on that one? No, move on to this one here. This one's a little more complicated here. I usually use a different problem, but for some reason this one is the one we have. So it's on page 302. All right, so here, the question it asks us is during the taking of this inventory, physical inventory, on August 31st, 2016, Key Interiors Company incorrectly counted its inventory as 366,900 instead of the amount of 378,500. Indicate the effects of the misstatements on their that they have on the balance sheet and their income statement for the year. All right, so what does it affect in what areas? So let's kind of walk through that. Actually, I'm going to bring up this spreadsheet. Move that over so we can see that. We'll just kind of walk through here. Let me change the so we got to figure out what accounts it will hit in the balance sheet. So in the balance sheet, let's take a look at the assets first, and then we'll go over the other ones that it hits. So if we incorrectly counted our inventory, and it should have been 378,000 some change, and we counted 366, that means we didn't count enough, right? So it's understated. That makes sense? So that's what we're gonna put here.
Merchandise inventory understated.
What's that?
The merchandise inventory understated.
Yeah, understated, there, yeah. So that's what you'll need to know as a part of that for the problem. So this, in the problem here, it will ask you how much it is understated or overstated, and then what counts as affecting as a part of that. And you're gonna have to kind of remember, so take this down as a part of that. So remember, inventory is the first thing that's gonna hit. That's what we'll take, because I'm just gonna go through the assets and we'll look at liabilities. There are already as a part of that too. All right, so that is, we calculate that real quick here. So 366, 900 minus
1,600.
1,600. Okay. All right. So that means my current assets would be understated too. About the same amount. Because remember that inventory falls in the current assets, right? All right. That also means my total assets are going to be understated. It's going to ask you that, those type of things, okay? One reason I really want to go with this one because it's going to be tricky. Obviously, by the same amount. Now, what that means is this. Remember that, and I'll put it up there since I have it on the spreadsheet here. My assets equals liability plus one more equity. Because of that, if my assets are understated, that means the balance here, means this is down one, right? The assets, that means I have to make it up on the other side of that equation somewhere. So it's not liabilities because we don't have any other liabilities that we know of. So it has to be in our owner's equity. So that's where we have to make that up here. So our owner's equity in the balance sheet is understated also. Or stockholders' equity in this one here. Just know it's your equities that is off. Well, let's see why that is. So we're going to go in the income statement and do that side now. All right, so if my inventory, because remember this problem here, we pulled out merchandise that wasn't there, or something's wrong here, so we had to add in, we took away more merchandise. So that means my cost of goods sold, or merchandise sold, is overstated. So that's where it'll affect my owner's equity, because that's my net income. That's where it comes in as a part of that. Does that make sense how that's tied together? So because of that, so that's where we're going to have a difference there as a part of that. So cost of merchandise sold. So now, how much would that be?
11,600.
So it could be, yeah, it would be 11.6 as a part of that. That's actually, do I understand? Yeah, I understand. So I'm used to writing it. Overstate. So that would be 11.6 there. That's the same there. So what does that mean for our gross profit? So our gross profit, then if I have more that was supposed to go cost of merchandise sold,
Understated also.
yeah. So it'll be under, because we didn't make as much money as we should have. So it's gonna be understated by 11,000. Actually, this should be a positive. Here's the understated, yeah. Oh, this one. Because of that, that affects my net income. I'm understanding what happened there. Does that relationship make sense at all? Kind of walk yourself through all of those as practice for the test. So just be aware of how to do that and what it's affecting, because it's really kind of a relationship, but how it's, the relationships work there.
So on the owners, or the assets is a credit, and so that's why you're crediting stockholders, because it's even
Just
out.
basically, yeah, we just figure out how it's
Okay.
affecting that. So that's why stockholders' equity has to go downward also.
Right.
Because the assets.
It's gotta
go.
equal.
Yeah, it's gotta equal.
Okay.
But the reason it did that is because of these things here.
Right.
Because net income was understated, so therefore, we had to drop our net income came down. As a part of that. All right, so those are the problems I wanted to go over for the exam. I went over 5 problems. Really, there's a chapter 1, but I didn't go over it because it was encompassed in this one here. It was basically an income statement, so that's what's tied to that there. So, at this point, I'm gonna pause that thing for a second, and then I will restart it. If you guys have questions, I'm more than happy to answer questions from any of the chapters that you're working on or anything like that.